Good evening, everyone. Welcome back to another video, another day, another dollar. We're going to be breaking down the futures contract. Per usual, we're going to look at our 30-minute time frame, and then we're going to look at our daily time frame as we have broken out a balance to the upside. And with a triple distribution, which was once a quadruple distribution at one point in time. Pretty much a grind to the upside all day long. Didn't really give you many opportunities to pull back pullbacks on the bigger picture, or not the bigger picture, but the bigger time frame, the 30-minute time frame. There were a few small pullbacks that you could have bought, on like your 1 minute, your 5, your 10-minute time frames, but there really wasn't anything as far as a afternoon pullback low or just any real strong, or not strong, but deep pullback on the 30-minute time frame that really allowed you to get long. There was only a few opportunities. I was only in a few trades today, took 2 trades. I didn't make much. I made 4.5 points on the day in ES, so roughly $225. Cannot complain. I'll take that kind of money, but obviously I'm not out here shooting for thousands or tens of thousands. I'm just trying to make a good amount every day. Being consistent with the trade is my most, or the biggest thing for me, right? I'm just trying to be consistent with my trades. And today I took what I felt was, what I felt was a good trade and where I felt comfortable taking the trade, given all the market generated information. So we opened up inside of the previous day's range and drove straight up, taking out Friday's high and then taking out our balance high. Once we got above our balance high, we had a little bit of a consolidation period between that balance high and 54.40, just a little bit of a consolidation period. And then finally we went and got the initial balance high. So there were a couple things initially in the buyer's checklist right out the gate, right? We had the opening, we had the overnight high, we had one time framing up, we had value high, and this market just continued to grind and set more things in the buyer's cap, a couple of feathers in their cap, right? So we continue to one time frame up. We create a set of single prints in C period, right? Creating a distribution. Had a little bit of consolidation here, which is where I got involved. I bought on pullback here in F period. I completely forgot about the bond auction that was going on. Thank God. I was looking for the market to rotate up, but I'm just happy that the bond auction did not cause this market to kind of come in at a quick pace. Otherwise, I would have gotten stopped out of my position, but it ended up pushing up anyway. The market generated information was stating so. We had been one time framing up all morning, basically until F period, where we stopped that, dipped our toe into the set of single prints that we had created. And then we basically just grinded up a little bit and then got that pop later in G, right? That's A, B, C, D, E, F. Oh, wait, am I kidding? A, B, C, D, E, F, G, or excuse me, in H period. I got long in G. That pop happened in H, creating another distribution to the upside. We initially had another set of single prints that pulled back. You filled that set, and that was another opportunity to get long there at the 57.25 level. And then after that, boom, another distribution to the upside was created, and then eventually got taken back. So we end up with 3 distributions. And then we start getting closer to that gap that starts on our daily time frame at 45.70. We dipped our toe right into it. 45.71 was our high today, and that gap starts at 45.70 and gets filled at 45.91. Now there's going to be a couple discrepancies in where the destinations on our continuous contract on the larger time frame for TD Ameritrade is versus the destinations on the upside for the contract of December, right? This is the December contract. What we'll be looking at and what we've been looking at on a larger picture is the continuous contract created by TD Ameritrade. So there's going to be a couple discrepancies in where the upside destinations on the 30-minute time frame using the December contract is versus the larger time frame. So What I give you is upside destinations on the 30-minute time frame is going to be a little bit different than the daily time frame that we're going to look at here in just a second. So let's go ahead and mark our destinations here. We have today's low, which, I mean, it literally was an opening drive. You opened up and then drove straight up. That is a true open drive. You opened, let me pull this back up here. What did we open up at? We opened at 45.24.50 and then boom, exploded to the upside. So very strong opening. That was the low of the day. 45.24.50 is the low of the day, which is also the lower end of the lower distribution. Low, so we'll label that lower day. 2023. Okay. Label that as such. Then we have single prints that fill here. Okay. This will be the upper end of the lower distribution. And I'll highlight and kind of review all these distributions going forward so you guys can see what that looks like and kind of give you guys some scenarios as well going forward. So single prints fill here, right? Buyers want to stay above this lower distribution if they want to continue this rally to the upside. And in yesterday's video, I was discussing how value was basically unchanged for me, but it was, you couldn't take away the fact that we did have overlapping to higher value come the close on Friday, right? I've discussed that in yesterday's video, how that might be a telltale sign that we could get some steam released to the upside. And if not, then we would end up rolling over and visiting the other end. Well, we ended up going with scenario one, where we ended up letting steam out to the upside. Pretty good, actually. All right. So we have single prints that start here at 44.50. Single prints that start here. And then we have another set here, which will mark the high here at 50.50. Okay, 50.50, that's where another single print will fill. And this will mark the upper portion of the middle distribution. Remember, there are 3 distributions. Okay, and I'll highlight all those and go over it once we finish labeling our charts here. We have single prints that start here at 56.50. 56.50. Boom, single print start. 11/20/23. And then we have today's high of day up here at 71. Today's high day, 71. All right, so we have 3 distributions, all right, each indicated by sets of single prints. So whenever you have single prints, you treat it as an intraday gap, right? So we have the lower distribution here that I'm highlighting, okay? You'll treat this whole range as 1 day, okay? And then you have the middle distribution that I'm highlighting, okay? That's where we spent some time and some volume there. You'll treat that as a separate day, right? So day 1, gapped up. Day 2, gapped up. And now you have your third distribution up here, right? Okay. So you have a triple distribution, each one indicated by a set of single prints. You had one set of single prints here, another set of single prints here, right? We had volume and price accumulated here, distributed here where volume and price was accumulated once more, distributed here where volume and price was accumulated once more. Okay, so the positive thing for buyers, right, what buyers want to see tomorrow is opening up in the upper distribution here, right? So basically opening above 56.50 would be a positive thing. You open above 56.50, you take out the high at 45.71, get into that gap, start eating it away, and that gap fills at 45.91 on the daily, and then you have that high of day at 45.97.50. Okay, if you open up inside of this middle distribution, you definitely don't want to take back 44.50 and get into this lower distribution. You find any acceptance into this lower distribution, then that just shows you that today's buying pressure was all short covering and very, very weak buying on that end. Okay, so buyers want to open up here or in the middle distribution. Definitely don't want to get into the lower. Okay, it would not be a bad thing for us to pull back, get into the lower distribution, right? Or not the lower, excuse me, the middle distribution, back testing at 45.50 level, and then running it back up to get into that gap. All right, especially coming into the holiday, right? There's only 2 more trading days until we have that day off, and then we have the half day on Friday. So just to kind of look at where I got long at on my position today, this is where I got long. I bought here, right? And as we pushed up, I got out here. The reason for the buy on the pullback was because we had that set of single prints, right? We had that set of single prints I was leaning against, and obviously I would have added on the way down because all the market generated information at the time was leading to the upside. So with all the information that I had, I was comfortable taking a long on the pullback, right? Was not looking to short the market, was comfortable getting long. And you had the 144 simple moving average sitting right around that area where that first standard deviation was as well. So I got long 45.50. And as this market pushed up, I got out 48.75 is where I exited my trade and made a couple good points on the day. Obviously could have held and let this grind do its thing. The only other pullback was right here at 57.25, and that's when you filled the smaller set of single prints that was here initially in those later time frames. Other than that, you just kind of let this market go up. Just keep in mind that no trade is also a trade. Okay, no trade is a trade, right? You don't want to be chasing this market, especially if you're not comfortable. Otherwise, you would have been some of the laggards up here that were buying at the highs, thinking we would continue to push up higher, and instead, all those buyers up here got hurt and clearly got stopped out. So there you guys have it. You have today's low of day, 45.2450, 45.43 where the single prints fill, 45.4450 where the single prints start. Then you have the middle distribution, 45.50.50 single print fill, 45.56.50 single print start, and then you have today's high, 45.71. And let's go ahead and look at the larger time frame. Kind of look at the gaps here. Look at where we're getting into. Just to kind of have a reference point, right? We're getting into that gap. We just ticked into it today, not by a whole lot, but that gap gets filled at 45.91. Okay, 45.91 is where that gap gets filled, and then you have that high of day that I just discussed. 45.9750 will be the high on that day, or on the 30-minute chart anyway. For that December contract, the actual high day was 46.0925 was the high on that day. So move it up into that 4600 level. Above that, you start getting into the highs on the year, which is a positive, right? NASDAQ set new highs on the year for this year, so that's a positive. We love to see it. Now let's go ahead and look at how we broke out of this daily balance. Now, we did push into that no-go zone for me on the long side. I was very hesitant to get long. That's why I was okay on that pullback where I got long. And obviously I would have added into basically 45.3675. But look at how we pushed up through it, right? There really wasn't much resistance. Now, we're getting into that gap, okay? That's where we gapped down, and then we had this large trend down, okay? We're getting into that area, and now we kind of have to determine, all right, are we going to fill the gap and continue to push up and then get the yearly high? That would be a very positive thing for buyers, right? Get that yearly high and have more of a rally going into Christmas. It's a positive sign for buyers. So we broke out of that balance to the upside with good steam. The only thing that's lacking on this push up is the volume. Volume really not that heavy. Just kind of shows you that the only thing that's pushing this up is short covering, and the only ones that are short covering are the ones that are short on the larger time frames, such as your monthly, right? And in yesterday's video, I discussed how the monthly balance was still being formed, and I was just using this 45.62 as a reference point initially because maybe that's all that we wanted to push up to. Now your monthly balance is still forming, so until this monthly time frame ends, we can continue to push up and set new highs on the year for this year, right? So far, our high on the year was set in July at 46.3350. So if we get above that, we're still in a balance, okay, until this time frame ends. So this monthly balance can continue to get pushed up. I'll go ahead and move it up to that area, but this monthly balance can continue to be formed until the time frame ends, and then at that point we'll determine how much of a balance or what our balance range is. And then obviously if we take out the balance high, then you would begin to one time frame up. But you got to think there are 2 months of shorts, right? If you're short on the larger time frame, there are 2 months of shorts already underwater. You're starting to eat into this third month here that was short. Could that be the reason we're getting more of this rally come come late November? So with all that being said, ladies and gentlemen, I hope you all had a wonderful day. If you guys do not mind, go check out Paul Asmar. Check out Camelback Trading, as he has some great content and great group of traders there. We'll catch you guys in the next one. See ya.